Hey everyone, this is part 2 of my account update video. In this video, I will go over all my trades that I've done in the last couple of months. If you want to see my account performance, you can check out part 1, which I will also link in the description box below. I just want to start off with my simple and basic trades that require no management. First off, we have Nordstrom, ticker symbol JWN. I sold the January 42.5 calls and the 32.5 puts, and I will want the stock to stay in between 32.5 and 42.5, which I have drawn in the green rectangle, and within the time frame of the rectangle. I took the trade off in 2 weeks, where I have drawn the black line, before it expired, for a profit of $58 per contract. Next we have the natural gas futures. I just sold the February $1.90 puts, so I want the stock to stay above $1.90, and again I took the trade off early for a profit of $200 per contract. Again with Boeing, I sold the 300 puts, which I held till expiry because I wouldn't mind owning the stock at $300, and it expired worthless, and therefore I gained a profit of $310 per contract. During FedEx's last earnings report, it had a bad earnings report, and therefore the stock tanked. So I sold the 130 puts again, and I let the puts expire worthless because I don't mind owning the stock again, and therefore I gained a profit of $125 per contract. I've been bullish on Walt Disney because of the new Disney Plus, but I find the stock a little expensive, so I've been selling puts in the stock, hopefully being able to buy it at a lower price. So this time I sold the 135 puts and it expired worthless again for a profit of $162 per contract. Now we'll move on to trades where I do some management on the trade. First off, we have crude oil futures. I first sold the Strangle, the 67 calls and the 47 puts, and then crude oil dropped, so I rolled the 67 calls down to the 64 calls. But of course, after I rolled it down, crude oil rallies, so I had to roll my 47 puts up to the 48 puts. Crude oil continued to rally, so I decided to roll out in time. So I rolled from January to February and changed my strikes from the 64 calls and the 48 puts to the 66 calls and the 49 puts. Of course, shortly after crude oil drops, I decided to roll my 66 calls down to the 65 calls, but that wasn't enough to reduce my deltas, and literally the next day, I decided to roll down my calls again to the 64 calls. And to my surprise, crude oil rallies, and by a lot, so I decided to roll my puts up from the 49 puts to the 52 puts, and about 2 weeks after that, I decided to close the trade for a profit of $11.80 per contract. Next up, we have NXP Semiconductors, which I put on as an earnings trade. I sold the 120 calls and the 95 puts. When they reported their earnings, their stock jumped up and the trade was a loser, so I decided to roll up my puts to the 110 puts. And as the stock continues to rally, I rolled up my puts again to the 115 puts, and the first decent down day, I closed the trade for a profit of $76 per contract. Merck was also an earnings trade, which I sold the 86.5 calls and the 79.5 puts. The trade was a winner, but there wasn't enough profit, so I was greedy and wanted more, so I stayed in the trade a little longer. The stock then starts to rally, and by a lot. My winning trade became a losing trade very quickly. I decided to roll up my puts to the 83.5 puts, but it continues to rally, and therefore I decided to roll up again to the 85 puts. But then of course it starts to drop, and now I had to roll my calls down from the 86.5 calls to 85 calls. When we had a decent rally, I quickly took the trade off for a profit of $40 per contract. I normally don't trade Xilinx, but I noticed I had decent volatility after his earnings report, so I sold the 105 calls and the 80 puts. What great timing I had, because within the next few days the stock gapped up, and therefore I had to roll my puts up to the 90 puts, and since then the stock kept slowly sliding lower almost every day. So I rolled my calls down to the 98 calls, and then I rolled them down again to the 96 calls, and the moment we had a little rally I got out for a profit of $93 per contract. I don't trade a lot of Chinese companies, but I do trade Alibaba. I sold the 205 calls and the 155 puts, and as the stock continues to rally, I rolled my puts to the 160 puts, and again to the 165 puts, and the first decent down day I closed the trade for a $60 profit. Not much, but I'm glad that I did, cause look at that rally that was coming. I've been trading a lot of gold futures recently as well. With this trade, I sold the 1620 calls and the 1455 puts. The moment I sold it, gold dropped, and it dropped hard, and I had to roll my calls down to the 1530 calls. This trade started off badly right from the start, and the moment I had a chance to close it for a profit, I did, and gained only $110 per contract. I was also trading a lot of British pound during this time because of Brexit, and because of the uncertainty, it had elevated volatility. But I was playing very safe, so I sold the $1.36 calls and the $1.22 puts, and as pound rallies, I rolled my puts up to the $1.24 puts, and after the vote on December 13th, the pound gapped up higher. But now some of the uncertainty is gone, volatility has dropped back down, and I was able to close the trade for a profit of $262 per contract. Qualcomm was another earnings trade that didn't go my way. I sold the 91 calls and the 79 puts, and after the earnings report it gapped up higher, and I rolled my puts up to the 88 puts, but it continued to rally. and on the same day I rolled my puts up again to the 90 puts, and on the first down day I closed a trade for a profit of $55 per contract. EWZ is a Brazilian ETF which I tend to trade a lot when volatility is high. This time I sold the 46 calls and the 39 puts. As the stock continues to slide lower, I rolled my calls down to the 45 calls and eventually closed the trade when it rallied for a profit of $30 per contract. I also trade a lot of bond futures recently as well. ZB is the 30-year bond future. I started the trade off by selling the 162 calls and the 150 put. As bond rallied, I rolled my puts up to the 152 puts and then again to the 155 puts. And when we had a pullback, I closed the trade for a profit of $2.99 per contract. Again, I put on another ZB trade shortly after I put on the previous one, but this time I sold the 163 calls and the 152 puts. And again, as bonds rally, I rolled up my puts to the 155 puts and I closed the trade shortly after the previous trade for a profit of $2.99 per contract as well. After my Merck's earnings trade, the stock saw some elevated volatility, so I sold the 87.5 calls and the 80.5 puts. As the stock continues to rally, I rolled my puts up to the 82.5 puts and then again to the 84.5 puts. The trade at this time was still a loser, but time was running out, so I decided to roll out in time to the 90 calls and the 82.5 puts. But as the stock continues to rally, I rolled my puts up again to the 85 puts. I was finally able to close the trade for a profit of $50 per contract when it stayed flatlined for a little while. Again, with NXP Semiconductors, it still has some decent volatility after the earnings report, so I also put on another trade after and I sold the 125 calls and the 105 puts. The stock initially rallied and I rolled my puts up to the 110 puts and was able to close the trade out for a profit of $101 per contract. After reporting earnings, I noticed Baidu has some decent volatility as well, and I sold the 135 calls and the 100 puts. As the stock rallied, I rolled my puts up to the 105 puts and eventually closed the trade for a profit of $142 per contract. After Ross Stores reported their earnings, I put on a trade as well and sold the 120 calls and the 100 puts. As the stock rallied, I rolled my puts up to the 110 puts, and as the stock started going sideways, I was able to close the trade out for a profit of $75 per contract. Here we have another British pound trade which I put on before the vote as volatility was elevated. This time I sold the $1.35 calls and the $1.22 puts, and as it rallied, I rolled my puts up to the $1.25.5 puts, and I closed the trade out after the vote for a profit of $106 per contract. I normally like to trade the 30-year bonds more, but this time I noticed the 10-year notes, ZN, had really high volatility, so I put on a trade and I sold the 132.5 calls and the 127 puts. And as the no future slide, I rolled my calls down to the 131.5 calls and eventually closed it out for a profit of $157 per contract. Here we have another 30-year bond trade. This time I sold the 166 calls and the 154 puts. And as this slides, I rolled my calls down to the 164 calls and again to the 162 calls and one last time to the 160 calls before closing out for a profit of $535 per contract. This gold trade was a winner right from the beginning, but I messed it up. I initially sold the 1565 calls and the 1425 puts, and right off the bat, gold was cooperating and had a profit around $500 per contract before gold started moving higher with the tension between the US and Iran worsening, which forced me to eventually roll my puts up to the 1515 puts, and that wasn't enough. It was still a big loser, and I had too much risk on, so I decided to roll out in time and readjust my strikes to the 1600 calls and the 1535 puts. This trade was well over $2,000 loser at that time. This trade is still ongoing. Here's another 30-year bond trade where I sold the 164 calls and the 152 puts, and as bonds slide, I rolled my calls down to the 161 calls and closed the trade out on the rally for a profit of $441 per contract. I started putting on more currency plays recently as I got more confident with my British pound trade. Here I put on a trade in Canadian dollar where I sold the 77.5 cent calls and the 74.5 cent puts. And with my luck, after I put on the trade, the Canadian dollar rises and I was forced to roll my puts up to the 76 cents put. I'm still in this trade currently, but at the moment it's a small winner. Again, I normally don't trade the 5-year notes often, but I noticed the opportunity in the elevated volatility. So I sold the 119.5 calls and the 117.25 puts. As it rallied, I rolled my puts up to the 118 puts and eventually closed it out for a profit of $126 per contract. These are about all the trades I put on during November and December. If you notice a trend, I was rolling up my puts most of the time, but that's what you can expect with a bull market like this. If you found this helpful, please give it a like and let me know in the comment section below, because there's no point in me sharing it if you don't find it entertaining or helpful. If there are any other details you would like to know, or if you have any questions, just let me know in the comment section below. And as always, if you enjoyed the video, please like and share the video. It really helps out the channel. If you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you in the next video.